Hi guys, today we'll be talking about the third video, why we need a home insurance revolution. This time we're going to focus on one thing. Remember last time we were talking about the government, the state regulators have some contributed to the non-renewal. But I also said that I'm not saying the insurance company has no problem of their own. They do. So this time, let's talk about this one. Most important issue, I just want to say that the insurance company are basically on a self-defeating road. They are doing something that they should not be doing if they truly understand the insurance. Let's give a few examples. The first one is in the city of Orinda. The city of Orinda has not had a wildfire for decades, maybe since the beginning of the century, and yet some insurance company are going there and drop a lot of policies just because they think that there's some homes in Orinda, in the city of Orinda, which is a upper middle class community. They think that the house is very risky, so they're going to drop it. Remember, for the same reason I said last time, that because they want to proactively drop in policies so they won't be subject to the frozen period for 1 year or maybe sometimes 2 years if the house is completely destroyed. Then they can only, they won't drop the policies for 2 years. So they don't want to do that, so they end up doing this. The same thing in Berkeley, they're dropping the policies. Berkeley, the last time I checked, the last wildfire was in 1923. Was a big fire, but it hasn't heard anything yet for decades. Yet the company are dropping those. So that's the problem. Why did it do that? That's a good question. That we're getting into that a little because there's a deep root of the problems. But let's say this today. We're gonna emphasize in this thing that they could have stopped doing that, stopped dropping policies. Let me just give you a very good example, two examples actually. The first one is from First Street Foundation. They cited the article I read like maybe 2 days ago. They cited that in Florida, the hurricane prone people, the area that is vulnerable to hurricane, according to FEMA, which means Federal Emergency Management Agency, according to FEMA, that a lot of area are hurricane prone. But it turns out that 78% of the hurricanes did not happen in those FEMA area. Instead, it happens elsewhere. So that means that that's a very good story to show that all these forecasts, all these predictions are not reliable. Okay, because natural disaster, it's only somewhat predictable, but not completely predictable. So that's why we don't want to turn those risk-prone area into risk-certain area. That's a big mistake because you're wasting money. Here's the second example. I read another article from The Atlantic. They is talking about the story in California this time. In forested community, small community surrounded by the trees and up above the city of Chico in I don't even know Chico. I think it's in Northern California. But anyway, so this household has a head of a household who is now 81 years old, a lady. She has been in that forested canyon area since 1970s. So that means that 50 years she's been staying there. And the other thing is that she never had any insurance. And the report says that she was complaining that she got a quote from the FAIR plan in California. By the way, a lot of people in California call the FAIR plan unfair plan. I think it's not fair because it's very high in premium and also low in coverage. Okay, the premium is on average is doubles the premium in for the other normal regular insurance. But anyway, so this lady never had home insurance, and the property is like 26 acres. It's a big piece of land. So she's been there for 50 years, and this year, boom, in 2024, the house is totally destroyed. What they ended up doing, they go to GoFundMe.com and then asking for support or asking for donations. Okay, so that's obviously not the best way to go, right? To go for it, and then the whole entire family, not just her, but the her grandkids, kids or grandkids, they all regret that they should have insurance. The point that I want to make with this example is that the insurance company could have had her paying, let's say, $200 each year for the premium. Okay, considering that the average premium in California is only 1,400 something on average. So California is really very lucky compared to Florida. Florida is like we're talking about 6,000, more than 6,000 for the same home insurance policies. Okay, California is very lucky. So because this lady and her family lived in the risky area, it's fair to charge her like a $2,000 premium each year. Now let's think about this. This $2,000, if you calculate it and compare that each year they got a 5% of a return, that's very conservative. You can even get a 5% return from treasury bond and something like that. And then so over 50 years, if that premium has been accumulated, then we're talking about more than about $420,000. That would be a big life savior for this family if the insurance company agreed to cover that. So we'll cover this more than so far. This one. Thank you.